The way that the wealthy build wealth, they're using multiple things in a proper sequence and order to invest through layers to multiply their wealth 500 times faster. I could have just put it into an index fund and it could have grown at 6 or 7%. But here I've turned it into 15 million, but it doesn't stop there. Now that 15 million, I can borrow against that. Bitcoin is our single greatest weapon, not just to build wealth for ourselves, but to change the world in a massively positive way. If it could capture 1.5% by 2030, that puts it at $1 million per Bitcoin.
Wow.
That's 20 years after it came out. Uber and Airbnb did 10% in 10 years. Whoever's listening to this, you're not smarter than Howard Lutnick. He put $1 billion in MicroStrategy. So all these people, oh, MicroStrategy is a scam, Ponzi. Okay, they put $1 billion, that's like 40% into MicroStrategy. On the other side, they invested into Tether. Tether is the largest stablecoin company in the world, and you're bearish. Like, we have this one of the smartest guys in the world, built multiple billions of dollars multiple times, running the government, building these operations, and having his money where his mouth is in 3 different companies that are benefiting from this, right? They're not doing it to pump their bags.
Mm-hmm.
They realize it's the best asset in the world.
Yeah.
Peru, Argentina, Lebanon, Turkey, etc. They desperately want dollars because their currencies are exploding all around them. But they're not able to get dollars. Their countries keep them from doing that. So U.S. dollar stablecoins have made it where they can easily get into the U.S. dollar. So the world desperately wants U.S. dollars. So the U.S. dollar stablecoin will get to the entire world, and then the government also has another problem. The government needs people to buy.
Mark,
Yeah.
thank you so much for letting me use your studio and interview you, man.
Yeah, exciting.
What are you most excited about right now in this crazy time?
What am I the most excited about? I'm so excited in every part of my life. Let me just back this up, and then we'll try to answer that question. I believe that all of life is about the law of compounding. Right? So Einstein called it the 8th wonder of the world. Those who know it receive it. Those who don't know it pay it. But typically that's used, I'm sure you use that all the time in regards to, how an account compounds over time and it doubles and things like that. But it's not just about money. It's about every single part of life, And so I built this house down in Mexico, this really big house on the beach. This guy came in, he wanted to do this home automation for me. He'd never done a house this big. This is really outside of his reach. And he was hoping that he could use my house to help him start getting more high-end clients. He did the worst job ever. Now, if he would have done a really good job, I would have recommended him to all my neighbors.
That's right.
But because he did such a horrible job, I'll tell all my neighbors to never work with him. So instead of it compounding, one job gets him 5 jobs, 5 jobs gets him 20 jobs, I'll make sure he never gets another job. Not because I'm vindictive, but if my neighbors ask me, I have to say no. So if I make a good YouTube video, people are more likely to watch my next YouTube video. If I make a bad one, they won't watch it again. But when it comes to learning, it's also the same way. I'm in this space where I am just voraciously trying to expand into every value that I have.
Yeah.
I want to be the ultimate best, not to beat other people, but just be a better version of myself, but in every area. I want to work smarter. I want to do bigger deals. I want to get more in shape. I want to be a better father in every area. And that was also the law of compounding as well. So it's I wasn't always like this, but at one point I read a book and I was like, wow, that changed my life a little bit. What if I read another one? What if I read another? Oh my gosh. What if I hired this coach? Oh my gosh. And over time. And so now I'm at this point in my life right now where it's I'm just so excited for every single part because every single part of my life is just maximizing and then they start to compound on each other.
That's right.
So now what I'm doing in the gym, the discipline I'm building in the gym, the way I've tweaked my diet to give me maximum energy all day then goes into my work and my clarity. So I'm super excited about a lot of things because of that, as you can tell. I would say ultimately one big thing that I'm really focused on is the law of compounding. I started making YouTube videos about 7-8 years ago, and I didn't want to. My partner at the time forced me to. We were going to break up. Our business would fall apart if I didn't. And here we are, the law of compounding. My reach has gotten to the point, we've got 100 million views or whatever. And the doors that has opened up because of that, the law of compounding, the relationships that I've built, and now I'm starting to see the impact that I'm making on people's lives through the coaching consulting programs, real serious change. But also now I have companies coming to me. I have like a publicly traded company that I just launched. I'm an officer of. I have other companies that are giving me equity to help them. And so it's like my pursuit of growth, being better every day, has now compounded, and I see this ripple effect. And so now I'm coaching and consulting people on a weekly basis. I have people coming into my studio this week to help them, and I see the impact of that. So I'm super excited about that. But then I see my reach even going into businesses and companies and helping them. And so that's what I'm the most excited about. So it's like almost like my pursuit of leveling up is now compounded into other people's lives and even businesses, and it's just amazing to see.
Yeah, I'm hoping to get a mini masterclass on your thoughts on Bitcoin and economics and just how Trump's doing. But before that, you've been talking about building wealth in layers, and I would just love to hear you articulate that. And because people come to you all over the place to learn how to build wealth, and although you're a big fan of Bitcoin and some other things, you also can take a step back and look holistically at the situation.
Well, I'm mostly known for my work in Bitcoin. I got started making content around cryptocurrency. Now it's just Bitcoin, not crypto. But I started my career in real estate. So it's like I've been an investor through multiple markets, through multiple assets. And I'd say certainly I think that Bitcoin is the cheat code. Bitcoin is our single greatest weapon, not just to build wealth for ourselves, which it is, and we'll break that down, but to change the world in a massively positive way. So it's the cheat code for life, for us individually and as a world. But also, like, whether you like Bitcoin or not, put that aside. Whether you like real estate, okay, like whatever. There's this raging debate in the Bitcoin circles, like real estate or Bitcoin, which one's better? Maybe you're a Dave Ramsey fan and you think you should just go into mutual funds and index funds. Like, okay, fine. Like, choose your weapon. But the way that the wealthy build wealth, and part of me building out this network is getting access to people like this to see these things, is that it doesn't matter. They're not trying to choose the best. They're using multiple things in a proper sequence and order to invest through layers to multiply their wealth 500 times faster. And so whether you like Bitcoin or don't, or whether you like index funds or don't, or whether you like real estate or not, that's not the point. It's how do I use multiple assets, understanding what we're really doing with them, and using them in the proper order and sequence to build wealth. So let me give you an example of what I mean. So what most people think that rage in this debate between Bitcoin and real estate is, well, Bitcoin's better. No, real estate's better. Well, Bitcoin's better because it's going up faster. It's going up at 50% a year. Real estate's going up at 5% a year. Yeah, but real estate, we can get leverage because of debt and blah, blah, blah. What they don't realize is that, and then there's all this talk about this Airbnb boom. All these people bought real estate and they're turning into Airbnbs, but Airbnb market's crashing and home values are dropping in Austin 15%. All these people are upside down. They don't understand. You see, what the wealthy do is they don't buy real estate for cash flow. They buy real estate for tax efficiency. So I was telling you I bought this ranch property out in Austin, Texas, $2.5 million property. That property is an Airbnb when I'm not there. I use it for events when I'm out there. But that got me millions of dollars of tax write-off. I didn't have to pay tax on millions of dollars because I bought that property. What do I care if it drops by 20 or 30%? I don't care. I got millions of, right? And so people don't understand this. They look at it like that. And so what happens is, like, I'm working with this hosted Bitcoin mining company right now. We're not selling hosted Bitcoin mining. We're selling tax efficiency. Yeah. What if I can get double the Bitcoin in 2.5 years and I get $100,000 of write-off at the same time? And so that's what I talk about with layers, is like understanding it's not the asset that I'm buying, it's how does it fit into my picture, and how do I use this in a portfolio that then allows me to multiply wealth. Let me just break this down. So I did a video on this. So like if I were to put $100,000 into a whole life insurance policy, compounding at 5% a year, and then I borrow the money out at 5% a year, isn't that a wash? No. Because one is compounding, the other one is getting paid down. So I take that $100,000, I pull it out, and I reinvest it. Reinvest it into what? Well, first of all, over 20 years, that's going to make me $50,000. That's like a 50% return on my capital. Mm-hmm. Then I take that $100,000, and now I go buy $500,000 worth of real estate, which potentially gets me, back of the napkin math, $400,000 of tax write-off. So I don't pay tax on $400,000. That could be $150,000 based off of whatever an average salary. Now I have $150,000 I got to keep because I didn't pay that into taxes.
Right.
Now I put that $150,000 into Bitcoin, and in 5 years, that's worth $15 million. And I didn't make a penny more.
Yep.
I didn't increase my income. I didn't work harder. I could have just put it into an index fund, and it could have grown to 6 or 7%.
Yep.
But here I've turned it into 15 million, but it doesn't stop there. Now that 15 million, I can borrow against that, borrow 50% LTV. I borrow 7 million out, buy more real estate, and I probably never pay tax again. And so that's what I'm talking about in layers.
What, do you have a framework when it comes to layering, or is it just one of those? It's like everyone's a little bit different. For example, you talk about tax efficiency. I know you're friends with Robert Kiyosaki. In his book, he's like, don't buy taxes just for taxes, buy it for cash flow. What is your, and one thing that makes Robert so iconic is he has the cash flow quadrant. He has the you are financially free when you have enough passive cash flow coming into. So what is your framework for layers? Because it sounds great. I love whole life insurance. I know you do as well. You put money in that asset and leverage that to do real estate. Is there like a 1, 2, 3 punch for someone listening or watching that are like maybe first principles of like do this, then do this, then do this?
Yeah. Shout out to Robert Kiyosaki. He was my mentor. I read his books for 25 years as he's become a friend. And it was really him that made me look deeper because I got to know him maybe around 2020 or 2021. And in 2021, California shut down. It was COVID pandemic craziness. And so we left, and I went to Puerto Rico with my family. And part of it was just because I wasn't going to live locked down. Part of it was like, I'm a surfer. I love the island. But also there's tax efficiency in Puerto Rico, right? And I remember I was speaking at conferences. Robert was speaking at conferences. And a couple times, more than once, 2 or 3 times, from stage, he called me out.
That's cool.
I want to take a break real quick and just say that there's only so much you can learn through videos. Yeah, build your knowledge, build your skills, but you need to build your relationships. Relationships plus skills equals money. So come build your relationships and your knowledge at the Bitcoin Conference, May 27th through 29th in Las Vegas. I'm going to be there speaking for the 4th year in a row, and lots of other people way bigger than me. Entertainment, politics, media, finance, you name it, they'll be there. So come check it out. Save some money with my code Mark Moss, or I'll put a link down below. If you use my code to save some money, I'm going to do a private meetup just for you and some of my friends. So let me know. Use that code, save some money, send me a message, and we'll get you in the private meetup, and I hope to see you in Las Vegas. Guys like Mark Moss and Peter Schiff have to move to Puerto Rico to not pay taxes. He's like, I don't pay taxes. And he would call me out like multiple times from stage, like, what an idiot this guy is. He had to move to get out of taxes. Don't they know that we just don't pay taxes? And so that made me go, like maybe I need to look at this a little bit more. And hanging out with him, having dinners with him, I'm like, let's break this down. Like, what are we doing here? What's the strategy? Whatever. So anyway, shout out to Robert Kiyosaki on that. The framework, I would say, I guess maybe I don't have a clearly defined framework as far as which assets go into which ones, because sort of like our mutual friend Garrett Gunderson, it's like this investor DNA. So as I said, maybe you don't like Bitcoin. Cool. Like whatever. Don't get hung up on that. It's like Trump derangement syndrome. Some people can't see past that. Okay, let's put a different asset in there. So looking at different assets differently, but I think the order makes sense of 1, set up that base layer.
That's right.
2, I use real estate there because that's how we get rid of the taxes. Now, there's other ways to do that, but like real estate is the easiest way to get that leverage, because what people that are like maybe they're thinking like level 2 or level 3 on this, they think they buy things for tax write-offs. Mm-hmm. But I mean, I still have to give up the money. What wealthy do is I don't want to spend $1 and write off $1. I want to spend $1 and write off $5. I want to spend $1 and write off $10. So then what allows me to do that? Well, typically it would be things that I can put leverage against. Right. So real estate is one. I'm working on bringing a product to market where we can do loans against Bitcoin mining equipment, and then I could also get that leveraged right off. Wealthy do other things with collectibles, fine art, things like that, land conservations, things like that. So there's other ways to get that. I mean, Elon Musk did it with Tesla, selling carbon credits or things like that. So there are other ways, but what are the ways? It all starts with a question, right? So it's like, okay, I set my base layer, so I always have it growing. Then how do I get the tax efficiency? And I know that I want $3, $5, $10 of write-off for every dollar I spend. So what gives me those? real estate's just the most accessible way for everybody to do that. Now I keep more money. What do I do with it next? Now you could put that in the S&P 500 if that's you. Maybe it's Tesla, Nvidia. For me, I think it's Bitcoin because I don't think there's any asset in the world that will outpace Bitcoin. Bitcoin is the cheat code, and so it certainly belongs in our portfolio. Most Bitcoiners would say just buy Bitcoin and don't do anything, and that's not a bad strategy. You can just buy Bitcoin and outperform every single Wall Street hedge fund. You can just beat everybody. Just buy Bitcoin. That's it. Just buy it. But because I want to get better at everything, why not make 300 to 500% more and do it that way?
Yeah, I wrote build the foundation and then leverage for tax benefits and then leverage for compounding.
So, that's exactly right.
I love that. All right, sell me on Bitcoin. I have a lot of the people that watch this are into real estate, are business owners, and understand the power of life insurance. So they're maybe more sophisticated than the average person. Bitcoin is one of those things that I get a lot of questions on.
Yeah.
And I remember during COVID, I was like, what is going on?
Yeah.
And now it's over 80,000. And there's people saying that that's only beginning. I talked to someone last night that's like, put your money in Bitcoin.
I think it has a 10x in front of it in the next 5 years.
Can help me understand?
Let's break down the math.
Yeah, help me understand Bitcoin.
So what happens is about every 50 years, for the last 300 years, we're on the 6th cycle. So we have these cycles. They're about 50-year cycles that happen, and I call them quantum wave cycles. Other people have called them K waves or conjointive waves. You can look at them however. But basically, we have a technological revolution that happens about every 50 years. And we get this cluster of technologies that gives us new sets of building blocks that we didn't have before. So the problem that humans have is we're no good at imagining the future because we can only imagine better versions of what we have today. But we don't imagine that we'll have different building blocks to let us build different things. If you have a deck of cards, what can you build with a deck of cards versus what can you build Legos, right? So we had, it all started with the Industrial Revolution. We had mechanized machines for the first time. Machines that could do the work of 5,000 men. Then we had steam engines and railways. Now we could move stuff across continents. Then we had electricity, steel, heavy equipment. Now we could build skyscrapers, bridges, electricity, obviously, oil fuels, automobiles, and mass production. In 1908, 1971, the birth of the microprocessor, which brought us personal computers, telecom, internet.
It's
Huge. These are all quantum leaps. And now we're entering another one. And what Bitcoin is this new piece of technology, and the problem that we have, because we can't imagine the future very well, we try to, our brains are really comparing mechanisms. Like, hey, this is heavy. Well, heavy compared to what, right? So what is this electricity? Oh, it's kind of like a digital candle. It gives us light. Well, it was like a digital candle. That was a use case for it. But of course, electricity is so much more than that today. So we think about what is Bitcoin. Well, it's sort of like these things. Well, it is like that, and it's like that, and it's like that. It's like, but it's even more, right? So right now, Bitcoin is it's a new piece of technology, and I want to try to explain it without going too deep. You need 1,000 hours. You can't borrow someone's conviction, right? But what we know is that we have this monetary history, and all types of different things have been money throughout history: feathers, rocks, seashells, and eventually gold emerged as the best form of money. So we understand that money is an evolutionary path. So it starts as a collectible. Look at this cool rock or feather or seashell. Look at this baseball card, this Pokemon card. Now, some collectibles, not all, but some evolve to the next stage, which is a store of value. Some baseball cards are stores of value. Some wealthy people do store their wealth or value in collectibles and fine art and things like that. Now, if some have the right attributes, it could evolve maybe to the next stage, which is a medium of exchange. So it needs to have the money attributes: portable, divisible, durable, recognizable, saleable, things like that. So like a Mona Lisa is terrible because you can't divide it up. A cow could be divided, but it's not fungible. One part, like a ribeye, is different than a liver, right? A banana would be terrible because it's not durable. So gold emerged as the best one, and it was the most scarce asset. But the problem with gold is that was great in an industrial era. So really what happened is we had this gold age, but in the 1500s, actually like 1498, Luca Pagliari in Florence, Italy, created a new piece of technology called the ledger and double entry accounting. And because gold was too slow, how do I sell it across the sea? How do we trade globally when gold is so slow, big, heavy, dangerous to transport? So, hey, we have this new piece of technology called a ledger or double entry accounting. So you give us the gold and we'll just keep track of the ledger. And that's basically the system that we're on today. The problem is who controls the ledger. And so that's always been the problem. So gold required all this centralization. And so what happened is all the gold went in the banks controlled the ledgers. But in 1933, the United States government seized all the gold from the people. And part of the reason why they seized it is because they were lying about the ledger. They kept printing too much paper debt, and it wasn't tied to the dollar, and they found themselves short. They owed a lot of gold. And so they said, let's just take all the gold that's in the banks. And so gold is always going to be susceptible to the same problem. It requires centralization because we're not in this old industrial age anymore. We're in an information age. And so today, now transactions are at the speed of light. Transactions. I can click until I have this problem. Every time I think of something, I just open my Amazon app and it's like here today, right? But settlement is still from the 1500s. Settlement still takes 3 to 5 days to get an ACH credit card into your bank account.
Isn't that wild?
But it's not even that. Final settlement's really about 90 days to 6 months because someone could charge their credit card back. Final settlement.
That's right.
So we have this antiquated financial system, but more importantly, not only is it antiquated, but it's destructive, right? And so if you look at charts, there's this website called WTF Happened 1971, and it's just a whole website full of charts. You'd love it. Just charts. That's it. And it's every single chart with a line at 1971. And the homelessness rate, boom. The single mother birth rate, boom. The obesity rate, boom. The incarceration rate, boom. Certainly our purchasing power going down, home prices going up, gas prices, everything, all the prices going up. But I laid out the destructive parts of society, the single mother birth rates, the incarceration rates, the divorce rates.
Why going off the gold standard? Why did that have that effect?
Well, because when we got off of any tie to sound money and started printing endless amounts of money, we create inflation. So when we print money, it creates inflation, which means that every time they print a dollar, my existing dollar buys me less goods and services. So as they printed more and more and more and more and more and more, my dollar bought me less and less and less and less and less. And so what happened is on an average wage where I used to be able to buy, the American dream, the house, the car, the college education, now today you can't. And so the reason why the cost of everything went up is because they kept printing more dollars. My dollars were buying less of those things. But at the same time, the destruction of society went down because what's the number one cause of divorce? Money. One of the main causes of obesity is I can't afford good food. I eat junk food. Why do we have the incarceration going up? Well, now I got to rob and steal. So it's not just that things have gotten more expensive. It's not just that my quality of life has gone down. It's not that they've literally stole my life. So let's think about this. Back just a few years ago under President Biden, we had, 9% inflation. Now, it was probably 20%, but let's just call it the 9. What does that mean? That means for the average person making $30 an hour, they have to work 10 hours more per month just to have the same quality of life that they had before. Just to have the same. 10 hours more per month. 10 hours that I could have spent with my kid. 10 hours I could have spent with my wife. 10 hours I could have spent on a side business. 10 hours I could have been in the gym. They took my life hours. All of economics is built on the law of scarcity. The most scarce asset in the world is time. That's what they took. But then we can see the societal destruction of that. And I have to lay out the problem because if you don't understand the problem, you don't understand the solution.
I love it.
So now we have a way to store our wealth, our value, our energy, our life energy in an asset that can't be inflated away. So Bitcoin has a cap of only 21 million. So they can't print more of it. And on top of it, they can't seize it, they can't manipulate it, they can't steal it, and I can transmit it immediately for almost free. Now people are like, Bitcoin's too slow and it's too expensive. Okay, that's a 2016 argument. Get with the times here. Like, I can send Bitcoin faster and cheaper than anything else right now. And by the way, in my setup of the problem, faster money was not one of those things. So a lot of times people are like, but this one's faster. Okay, so we needed faster money. That's the cure to all our problem. Understand what the problem is, so you can understand the solution, right? So now we have a way that we can store our value in a way that can't be taken from us. If you think about it, right, back to energy, right? So if I dig a hole for 4 hours and I can earn enough to live for that day. What if I worked an extra 4 hours? So I worked 8 hours. Well, now I could save, so I have some money. So tomorrow I don't have to work. I have the money I could pay. So really, if I think about that money, it's like my energy. Mm-hmm. It's like a battery.
It's like oxygen. Yeah.
But it's like, I think of it like a battery, right? It's stored that energy so I could deploy that energy tomorrow and I don't have to work if I don't want to. But like, you don't want your battery to be leaking. Like, you don't want to come out in the morning and you can't start your car, right? And so that's what happens with dollars. And most people know this by now. Like, you don't store your wealth in dollars. People understand this. Okay. But Bitcoin is this revolution where now I have this way that I can store it in a way that can't be debased. And it's just real simple. I say one of the two greatest tricks the Fed ever played was, one, telling people that we needed our money supply to always expand. And two, that asset prices going up is a good thing. Neither of those are true. We don't need our money supply to go up. Would you rather have your money buy you more goods and services in the future or less? And so when you have an inflated money supply, it always buys you less. A fixed money supply buys you more. So that's sort of the premise as to why Bitcoin. Now, I'd like to tell you why Bitcoin and not the other ones.
Yeah, because I'm writing down law of scarcity. This is something that's big. And is that the difference between gold and Bitcoin? Or is it the ledger? Who controls the ledger?
It's all three of those, right? So in order to have the attributes of sound money, you need portable, divisible, durable, recognizable, things like that, right? Gold is very durable. It can sit in the bottom of the ocean forever. It doesn't corrode, right? You can break it down, melt it. So gold worked really well, and it's the most scarce out of the money. That's why it won over silver. But it's not portable. And it's not easily verifiable. So with gold, how do I know what the purity is, the weight is? So they've had all types of coinage and they've done all types of things. But like, China had gold bars that were tungsten painted as gold, right? So like, how do I verify if the gold is real? So gold is certainly the best, but it's not portable.
Okay.
And it's not verifiable very easily. I need like some spectrometer or something to do that, right? So gold is, and it's the most scarce, but Bitcoin is more. So Bitcoin is more scarce, Bitcoin is more portable,
right?
And Bitcoin is more verifiable, right? So that's why it wins over that.
Okay, so now, dive into Bitcoin over other cryptocurrencies, because even Trump the other day tweeted about,
Trump coin?
Yeah, well, that, but also like XRP, Solana. He mentioned, I don't know if he mentioned Ethereum. He mentioned it, and so all of those went up.
They went up and they went back down. So when it comes to first, we can talk about Bitcoin in regards to real estate and all the other assets, but let's just talk about it in regards to cryptocurrency. So you need to put 1,000 hours in, but I'm giving you the crash course here. So like, what is Bitcoin? So instead of having one database, so like Facebook or MySpace or Experian, they're in like a database, and there's like, it's in a company, and there's like a cybersecurity team that tries to protect it, but every database has basically been hacked, right? So Experian was hacked. I mean, the NSA was hacked, right? But what Bitcoin is a revolutionary technology that we've never seen before. And what it is instead of having one database, it's a decentralized ledger. So we now have 1,000 or 1,000,000 or 10 million ledgers. So if I had a bank with $1 billion, that's a pretty big target. Someone might want to go attack that. But if I have 1 billion banks with $1 each, and so we have this new decentralized ledger, and what happens is, it's only decentralized if everybody can run one. So the Bitcoin database is very small. It's about, I don't know what it is right now, probably 400 or 500 gigabytes. So that means a kid in Africa with like a 5-year-old laptop could run a Bitcoin database. So anyone in the world could run it. You could put it onto a thumb drive. Anyone in the world could run a database, which means it stays decentralized. And what happened is, in the beginning, if 5 people run it or 10 people run it or 100 people run it, it's not very strong. Because what happens is the database has to achieve consensus. So if I only have to take over 10 nodes or 15 nodes or 30 nodes, that's doable. Then we have the mining. So we have the database layer, and then we have the mining layer. The mining layer is the digital energy. So that's what protects the network. That's what processes the transactions. So the hashing power is so big, and then the database is so big, so you have to take over half of that to even have a chance. And you still wouldn't do it, but you have to have a chance. So what happened is Bitcoin was created in this wrinkle in time. It was, we call it this immaculate conception. We don't know who created it, who Satoshi Nakamoto is, but it was created in this wrinkle in time when nobody knew what it was. And it was allowed to grow in the wild for about a decade until people realized what was going on. And at that point, it was too big to kill. The problem is today is there's no way to do that again. I mean, people have tried.
Okay.
Because what happens is all the other, you mentioned Ethereum, ADA was one he mentioned, Cardano, Solana. Those are all basically just centralized ledgers over a couple nodes. And the reason why is because I can't run an Ethereum node. The database is way too big. I have to run a pruned version, a crimped down version, on a professional server in a professional co-location facility. A kid in Africa can't do that. And so it's created this centralization. And so Only Bitcoin has done that. Now, other people have tried to do something similar, but the problem is now that we know about it, it gets attacked immediately. People will attack it, they'll double spin, they'll steal money off of it. And so now nothing can get big enough. It's kind of like when you have an invasive species, a rabbit comes over to Australia. And they don't have a rabbit, or a fish comes in. We have this problem all over the U.S. Like mussels come in, or a fish comes in, right? And it takes over that habitat. And once it's taken over, like there's nothing else that can really come in and take that. So Bitcoin sort of grew in the space, and there's just nothing else that can be there. And that's why nothing else. And so you have to understand the technical side of things. What we want is something that nobody can control. Ethereum has changed their monetary supply like 3 times in the last 2 or 3 years.
The law of scarcity goes out the window.
And all these other coins, Cardano and XRP, they have something called governance. They all have governance. So what that means is that they have staking. So whoever has the most tokens stakes them, and whoever has the most tokens staked gets the most votes. And then they vote on changes on the algorithm.
And none of that exists in Bitcoin.
There is no consensus.
Yep.
I mean, I'm sorry, there's no governance.
Yeah.
It's rules, not rulers.
Yep. What are some of the biggest conspiracy theories when it comes, like the fact that we don't actually know who started Bitcoin? And like I'm going to ask you to do something difficult, like play devil's advocate to like what are some of the biggest cons you think that Bitcoin has? Is it because I know a talking point back in the day was like it's going to get to a place where it's going to be too hard to mine and it's going to cost too much and energy. And I talked to someone yesterday that says the amount of water that's going to have to be used to cool down these machines. And so you have some environmentalist people. Like, what are some?
None of that's true.
Okay, yeah,
none of that's true. I can go through each one of those one by one, but if you ask me what is the biggest one today that I can think of, the only threat that Bitcoin has, we've defeated all those narratives now. We've even defeated what the governments will make it illegal. We've defeated that one as well. Obviously, right? Trump has now created a strategic Bitcoin reserve. It's in the U.S. government. He said that the U.S. will be the Bitcoin powerhouse of the world. Like anyone who thought the government's going to make it illegal, like that's out the window too. The biggest one is if Bitcoin can stay decentralized and secure. Can it? If as long as it continue to stay decentralized and secure, that's it. That's the biggest threat. Now, what would have to happen for it not to be? Trust me, over the last 7-8 years at all these conferences and events I speak at, we stay up late at night playing game theory, and I don't know the answer for that. Theoretically, it's impossible, but anything can happen, right? So possibilities are endless. Probabilities are few. So the probability of that happening is very low. But some of these things, so let's talk about the energy one, for example. First of all, anyone who says that argument should just be disregarded in the first place. And here's why. And anyone who knows
anything,
basic stuff, knows that the wealth of a nation comes from the amount of energy they have. The poorest nations of the world have no energy. Like people in Africa whose kids die every single day because they don't even have a hospital or an incubator to put their baby in. Wealth of nations comes from the energy they have. Energy is a good thing, not a bad thing. So anyone who says that right off the bat should just be disregarded. But they also don't understand Bitcoin either. So in order to make Bitcoin mining profitable, you need to have about 3 cents per kilowatt hour power or less. Here in California, in the summer, we have a tiered system. At the top of the tier is 40 cents per kilowatt hour. You can't mine Bitcoin in California. So if it's 40 cents in California, why would someone sell it for 3? Well, the law of supply and demand is very basic. Yeah. And it would basically tell me the only reason why someone would sell it for 3 is if they created the energy but have no buyers for it. So what happens is the way the energy system works, especially now that they've completely screwed it up by putting unreliable power in there from wind and solar, is that when I turn my switch on, I expect electricity to come on. So we need to always have power. So we have base load, but we also have to be prepared for peaks. It gets hot, everyone turns the AC on, whatever. So what happens is now in unreliable power, the wind and solar, sometimes it's not windy and sometimes it's not sunny. And so now we have this problem. And so they've been building what they call peaker plants. They build an entire other plant to be run in the event they need more power. So we have this place all over the world where power is being created but not being used. That would be what I would call the definition of waste. they say Bitcoin is wasting energy. If you use something, that's not a waste. But they're literally making energy and not using it. That's a waste. And so Bitcoin can only operate on wasted energy that's already been created and is not being used. And once it starts being used, the price starts going up. Competition goes to 5 cents, 7 cents, and Bitcoin has to pack up and move to another district where it's cheaper. And so, anyone who said that, first of all, they don't understand energy. Number two, they don't understand Bitcoin at all. So I'd say that, and yeah, who cares about that? But ultimately, I would just say, like, Bitcoin is the apex predator of assets. And the reason why is because all the forms of storing our capital today are 500 to 700 years old. Stocks, equities, right? How long ago was that created, right? The Dutch created that, the stock market. So we have all these different assets, and like real estate seems like a good asset, but when you look at the maintenance and the property taxes, you understand what's going on with that. Or gold, like where could you have put gold 100 years ago that would still be there today?
Yeah.
Right. And so then you look at, okay, so then we can go into, and I'm just going to throw this out there. We don't have time to go down this rabbit hole. But if you think about oil is an asset. Oil is a commodity. Bitcoin is an asset. Bitcoin's a commodity. A commodity being different than an equity. A commodity being that anywhere in the world can go get it.
Right.
It's fungible no matter where you get it, right? There's no common issuer, right? Whether it's wheat or oranges or oil. So Bitcoin is that. But you have oil as an asset, a commodity that sits around $60 to $80 a barrel for the last 50 years. So buying oil itself isn't necessarily the best thing. But there's an oil industry. That's the 8th largest industry in the world, worth $4.8 trillion. So who made the pressure sensor for the oil pipeline? And who made the sonar for the oil tanker, right? And so we have Bitcoin, but now we have this Bitcoin asset. So when I talk about energy systems, for example, Bitcoin is now transforming our energy grids across the entire world.
That's right.
So we haven't thought about that. But if we just think about it from assets specifically and only store value assets, what are the things that we're using currently to store our value? Real estate, bonds, equities, cash, offshore bank accounts, fine art, collectibles, gold. Right now, today, that totals about $900 trillion. Now, that pie continues to grow. So as we continue to print more money, that grows. At the rate that we're on, that $900 trillion by 2030 will be 1.3 quadrillion total store value assets. And then you would just ask yourself, there's 30 to 40 trillion in offshore bank accounts. Is Bitcoin better than that? Sure.
You start lining it up and you're like, Bitcoin is superior over all those things.
It's superior over all those stuff. It doesn't mean they all go to zero. What it does mean is that Uber is superior to taxis. Taxis are still there today. But Uber pulled value. So we have, from a venture capital lens, we have disruptive technology. We look at the market size that it's disrupting. We estimate what a percentage we think we can capture from that industry. So Uber and Airbnb both captured 10% of their markets within 10 years. So then the question is, if Bitcoin is superior to all those other assets, what percentage of that pie do we think is realistic to capture? If it could capture 1.5% by 2030, that puts it at $1 million per Bitcoin.
Wow.
Now that's by 2030. That's 25.
And that's less than 2%.
It's less than 2%. That's 20 years after it came out. Uber and Airbnb did 10% in 10 years. So,
That's, Mark, you have a gift. I've talked to lots of people, and you laid it out this better than I've ever heard before. So thank you.
Okay.
Our time's limited. Can we rapid fire some things?
Let's do it.
I want to understand quickly about the government crypto reserve and like what that means.
So the government crypto reserve, Trump is the master negotiator. The art of the deal. He read it. He wrote it. If you haven't read the book, just read it. And so one tool that you have in negotiating is something called anchoring. So you throw out something big to anchor or shift the Overton window, as we call it, right? So Trump throws out crazy things, and you think he's crazy. Nothing. By the way, I just listened last night. There's an interview with Howard Lutnick from the All In
podcast.
Have you listened to it?
I have not listened to it, but it's on.
I saw everybody saying it's the best interview in the world. I watched it last night, and I went, holy crap, we have the very smartest people in the entire world.
I've seen clips, and it's pretty exciting.
Wow. But anyway, and he's known Trump for 35 years. He paints a picture of him. He is not an idiot. Everything he says is perfectly measured. So he came out and said that, well, first, in the presidential run, you had RFK Jr. Still running at that time, and he came to the Bitcoin conference, said he wanted to create a strategic Bitcoin reserve. Well, Trump, not to be outdone, said, "Well, I'll do that as well." Obviously, they're working together now. So we also have Senator Lummis from Wyoming has already submitted a bill to also create this in the government, and lots of people are backing this. Now, what Trump did is he came out and said, maybe it'll be a crypto asset reserve, and maybe we'll do Cardano and we'll do Solana and all these things. And he just kind of threw out all that crap and basically got everyone outraged. And not just everybody. Brian Armstrong, the CEO of Coinbase, which makes all its money from people trading those assets, came out and said, whoa, you can't do that, only Bitcoin. The creator of Solana came out and said, well, even though his coin got mentioned, he said, whoa, we can't, like, hang on. And so everyone's like, no, just Bitcoin. And then Bitcoin went through. And they were very clear when it went through that it is only Bitcoin. Everything else will be looked at completely different, will be treated completely different. And they made this big differentiator.
And does that mean the U.S. is just going to stockpile Bitcoin? Or what does that mean?
We don't know exactly. So the details of it have not been fully fleshed out. So he said, as of right now, any government-owned Bitcoin that we have currently, which was about 200,000 under the Biden administration, but we believe that they've been secretly selling it off. But whatever we have left on the books will be kept. Okay. So about 200,000. That's about 1% of the supply. And then they're going to create a plan to continue to buy more Bitcoin, but he called it in a budget-neutral way. So what can we do to get Bitcoin without paying for it? Because taxpayers may object to that. So could we trade gold for it? Could we do it through tariff? What could we do in a budget-neutral way? Mm-hmm. So that's what we don't know the details of that yet. But when you listen to this interview of Howard Lutnick, who's running... Dude, the guy is so smart. You have to listen to this. But like he's helping. He's the Commerce Secretary, so he's helping set up the not only the Strategic Bitcoin Reserve, but the Sovereign Wealth Fund. Mm-hmm. And so both of those will have Bitcoin. Let me paint this picture for you. So Howard Lutnick, dude, listen to this interview. The guy is so friggin' smart. Yeah. He owns a company called Cantor Fitzgerald. Right, it's $1 billion Wall Street fund. Right, and He had the top 5 floors of the World Trade Center. His company got bombed out. 600 people that worked for him died. His company got destroyed. He rebuilt everything. So he's built it from the ground up multiple times. Cantor Fitzgerald announced that they are going to open up a $2 billion Bitcoin equity facility or credit line. So basically institutions don't have to sell the Bitcoin. Mm-hmm. They can tap into the equity. So that brings $2 billion to the market. So Cantor Fitzgerald now is sitting at the center of this Bitcoin web, let's call it. Well, Cantor Fitzgerald now also bought $1 billion in MicroStrategy in Q4 of last year, just recently. Mm-hmm. Whoever's listening to this, you're not smarter than Howard Lutnick. You're not smarter than him. He put $1 billion in MicroStrategy. So all these people, MicroStrategy is a scam, Ponzi. Okay, you're not smarter than him. They put $1 billion, that's like 40% into MicroStrategy. On the other side, they invested into Tether. Tether is the largest stablecoin company in the world. But that is putting their treasury into Bitcoin as well. So we have Lutnick, Cantor Fitzgerald, we have MicroStrategy, and we have Tether here. Now, in his role in the government, he's creating the SBR and a sovereign wealth fund, which will both be centered around Bitcoin. Yep. And you're bearish. Like, we have one of the smartest guys in the world, built multiple billions of dollars multiple times, running the government, building these operations, and having his money where his mouth is in 3 different companies that are benefiting from this, right? And I just made this video on YouTube, and I told Mauricio that I felt bad now this morning because I watched that video. I kind of said, like, hey, he's in the government, he's pumping this thing up, whatever, and it made it look like a little scammy. I didn't mean for it to be that way, but after watching this video, the guy is so smart, and he is a true American patriot. Like, listen to the video, he's a true American patriot, and they're not doing it to pump their bags. Mm-hmm. They're not doing it for that. They realize it's the best asset in the world. Yeah. They realized the history, right? So when China in the late 1800s decided that they were going to stay with the silver standard when the whole world went to a gold standard, China lost their place in the world. Yeah. And it's taken them 100 years to come back. Yeah.
With the last 2 minutes, there's a lot of questions that I want to ask, but we are the wealthiest country because of the American dollar. How does crypto threat the U.S. dollar? And then let's land the plane because I know we have a hard stop.
Well, we're not just the wealthiest country in the world from the U.S. dollar. Howard Lutnick put this into perspective. So you always hear about the GDP of the country. Mm-hmm. You hear about the revenue of the country. You You hear about the debt of the country. As a business owner, there's still a number missing. So we have $36 trillion in debt. We have $29 trillion of GDP. We have $6.5 trillion of spending. We have $4.5 trillion of revenue. So you hear the revenue and spending, we're a $2 trillion deficit. That sounds terrible, right? But as a business owner, there's one big number missing. What's the balance sheet? What's the balance sheet of the United States? Estimated between 500 trillion to a quadrillion. That's the balance sheet. So when you have a business guy like a Lutnick come in and go, wait a minute, look at the balance sheet. We have $500 trillion of assets. What is $36 trillion of debt? We can balance the budget. The debt is minuscule. We can monetize the balance sheet. Like, what are we doing here, guys? And so, anyway, back to, it's not just this because of the currency. We have the balance sheet. Anyway, so back to the currency question. So the dollar is the reserve currency of the world. I don't think anything is changing that. I did make a video recently. So the Trump administration, the U.S. government is all in on creating U.S. dollar stable coins. And so part of the reason why is the world, when I talk about the world, Peru, Argentina, Lebanon, Turkey, etc., they desperately want dollars because their currencies are exploding all around them. But they're not able to get dollars. Their countries keep them from doing that. So U.S. dollar stable coins have made it where they can easily get into the U.S. dollar. So the world desperately wants U.S. dollars. Bitcoin, as much as I believe in it, and it's a 10x in front, you should be buying it. It's too volatile for the average person to be trying to live their life on it. No, if you have money you can put away for 5 years, you should put it into Bitcoin. But if I have money that I'm trying to spend, I got to pay my rent next week, it's too volatile. So the world needs dollars. And I think the two complement each other in a transitional period. So the US dollar stablecoin will get to the entire world. And then the government also has another problem. The government needs people to buy treasuries. Yeah. So now we have vis-a-vis, we have the world buying stablecoins. Stablecoins go into treasuries. So I believe this will cement the dollar's position in the world as the reserve currency. It will only become stronger than it already is and will take over everything because even countries with their own currencies, the people want the dollars. The stablecoins will get it out there. And working together with Bitcoin and the dollars, it will cement that position. Now, we have all these things we can store our wealth in. Gold and collectibles and fine art and all these things. It doesn't take away from the dollar. Nobody thinks they should be storing their wealth in the dollar.
Yeah, it's not a store of value.
So we store our wealth in other things, and we use the dollar to buy your coffee in the morning. So I don't see how it really threatens the dollar. Now, over a long enough period of time, yes. I believe that will happen by about 2050, 2055. Then there's a threat. But I think we have the next 30 years in front of us.
Mark, thank you. I could talk to you for hours, and we will put all your information, including, I'm going to ask you off camera, any resources on Bitcoin that someone's like, I'm sold, I want to learn more. We'll have that below. Thank you.
Yeah, thank you.